When was the last time you reviewed your S-Corp tax saving strategy? If it's been a while and you're an experienced or a new locums professional, it's time to review your S-Corp tax strategy once again. In this video podcast, I'll be going over the exact strategy I would use for my S-Corporation if I were a locums medical professional. Welcome to the Locum CPA podcast. My name is Stephen Lee, a CPA based out of Chicago, Illinois. In this podcast, we talk about the business of being a locums medical professional and how to accelerate your financial goals. So let's get right into it. Happy New Year's, everyone. And right now, it's going to be the third week of January, and you're probably getting ready for tax season, getting all your 1099s, your W-2s, your home mortgage statements, all of those things together. Don't worry. You definitely want to check out my previous video on how to have a stress-free tax season. So you definitely want to check that out. New Year's, it brings about new resolutions and strategies for both your personal and your business. I actually have one resolution that I'd like to share with you, and I hope you can keep me accountable. And that's to create one video podcast per week this year for you. So by the end of 2025, I hope to have produced at least 52 video podcasts for all you locum medical professionals. It's going to be a mix of evergreen content as well as Q&A sessions, so you don't want to miss out on that. I would love if you can share what is one New Year's resolution that you have, and I'd love for you to put that in the comment section below. All right, so if you're a locums medical professional, let's get back to the video at hand. What are we trying to accomplish here? If you have an S-Corp set up, you want to make sure you're reviewing the tax saving strategy every single year for that S-Corporation. Remember, you set up the S-Corporation, or your CPA or accountant set up the S-Corporation so that you can maximize tax savings. So really, this list that I'm going to go over here is really trying to make sure you are maximizing your S-Corp for its tax savings potential. So let's dive right in. Step number one, what would I do? Number one is project your locums income for 2025. Once again, that's to project your locums income for 2025. First, how would you go about doing that? First, I would refer to your 2024 financials. Right now, it's tax season and you're getting everything together right now, all your tax documents, you're getting your financials, you're getting your bookkeeping done. So having access to your 2024 income shouldn't be too hard over the next week or two or the next couple weeks as you're preparing for your 2024 tax return. So I would get that ready first. Then I would create an Excel spreadsheet, either Excel or Google, and I'll create two columns. First column is going to be 2024 income, and I would break it up by months because many of you locum professionals, there's a fluctuation in income, right? Some of you like to take the summers off. Some of you like to work more during the winter or during certain holidays or peak seasons. So you want to make sure you break it out by month. You start off with 2024. How much did you earn in 2024 in locums income in that first column? January through December, right? Then that next column, you put 2025. And how do you go about really projecting out your 2025 income? You examine your current and your upcoming locum contracts or contracts that you plan to sign with, right? So that's how you're really going to map out your 2025 income. You're going to start with your 2024. Then you're going to look at your 2025, your current contracts and the ones you plan to sign. Because a lot of locum professionals that I talk to, whether you have a mix of W-2 income and 1099, and that's many of you, you might be doing 2 weeks on, 2 weeks off, right? 3 weeks on, 1 week off. Whatever that schedule is, really map it out for 2025 per month, right? Because you know exactly when you want to take vacations. And why did you sign up to be a locum professional in the first place? It's to have that flexibility so that you can go on vacations, take time off, pursue different hobbies and interests that you might have. So you really want to map that out and project out your 2025 income. So that's step number one, projecting your 2025 income. Step number two is determining your reasonable salary or reasonable compensation. With an S corporation, you pay yourself in two ways. The first is salary, and the second is distributions. And the IRS knows this. We all set up our S corporations to save on taxes. It's not that we want to set up an S corporation just for the sake of setting one up. The real reason is to save on taxes, and the IRS is very keen on that. They know that we're trying to save on taxes, and what taxes are those? Those are payroll taxes. So what that means is if your salary is really high, then you pay more payroll taxes versus going back to what I said, you pay yourself in two different ways, salary and distributions, right? So really the strategy here is to make sure your salary is reasonable and your distributions hopefully is higher than your salary. So we're trying to get your salary as reasonably low, let's say, compared to your distributions, right? Because the distributions, both of these you pay income tax, but only on the salary portion is where you actually pay payroll taxes, right? FICA, unemployment, things like that. So your taxes actually are greater when you're taking a salary. So the IRS wants your salary to be as high as possible, right? Higher than your distributions, right? But for us, we're trying to make our distributions higher than our salary. But what's important is you want to make sure you have a reasonable compensation, because what's on the table here is if you fail to pay yourself a reasonable compensation and the IRS examines you and also agrees that you did not, you are potentially facing IRS penalties, interest, and additional taxes, back taxes for payroll taxes you didn't pay. So they might do that. And I have a previous podcast where I go over reasonable compensation in much more detail. I'll pin a link in the information section of this video, so you definitely want to check out that podcast. Are you a new or experienced locums professional? I have a great guide for you on how to start and operate your locums practice for maximum tax efficiency. I'll pin a link to that freebie in the comment section below, so you don't want to miss that. All right, step number 3, what would I do? Once I have my 2025 projected income, once I've determined what my reasonable compensation is, the third and next and vital step is to determine what is going to be my retirement contributions. How am I going to defer income? What that means is basically paying less taxes now by deferring the tax to the future, by contributing to a retirement savings plan. And in my previous podcast, you're well aware there are many savings plans that are out there that are available based on your income for that year, as well as what you can contribute. And a lot of this is the financial goals that you have as an individual, right? If you are just starting off as a locums professional or a medical professional, you might have a lot of student loan debt, right, that you're trying to pay off, that you might want to be allocating a lot more of that to paying that off. But go back to my previous podcast on should you save or should you pay off your student loans, right? So I go over a strategy there that it will be really helpful for many of you locum professionals. But going back to retirement contributions, why is that step number 3? The reason why is because retirement contributions as an S-Corp shareholder is intimately tied to what your reasonable compensation is. And why that is something like, for example, the SEP IRA. We know that the max contribution in 2025 by IRS guidelines is $70,000. But in order to contribute $70,000 to your SEP IRA, which is a great retirement savings vehicle, you need to have a reasonable compensation or a salary between $280,000 and $300,000 worth of W-2 income. That's a lot. And that's a lot of payroll taxes, Social Security, Medicare taxes that you're going to have to pay. So what would I do? I recommend starting something called a solo 401k plan. Once again, that's a solo 401k plan. And the max contribution is exactly the same as a SEP IRA. It's $70,000, but that's going to be a mix of employee contribution and employer contribution. Once again, the solo 401k is a mix of employer and employee. And the employee contribution, the max is $23,000 in 2025. And then the difference to get to the $70,000, what is that? That's going to be $47,000 is the employer contribution to get you to $70,000, right? So what I would do is once I set up a reasonable compensation, a salary, then I would have $23,000 of that gross salary put away into a solo 401k, and that's the employee contribution. And then the remaining $47,000 I would put in as an additional contribution by the employer, and that's also a tax deduction. right? So you're really putting away and deferring $70,000 worth of potential taxable income for income taxes into a 401k plan. It's extremely powerful. And let's do a little bit of math here. Let's say you put in the full 70,000, okay, and your effective tax rate is 30%. 70,000 times 30%, that comes out to $21,000. Now, what is that $21,000? It's tax savings, instant tax savings for you contributing to that solo 401k of $70,000, okay, for 2025. So you definitely want to make sure that you're setting up that solo 401k, having a reasonable compensation, and really contributing the max of $70,000. Question for each of you: which retirement plan do you like? Do you like using the SEP IRA or the solo 401k? What have you set up and what have you used in the past? I would love to hear your thoughts in the comment section below. Step number 4, maximizing tax deductions, right? There's 6 of them that I'm going to go over here. And this is once again a deferral strategy, right? We're trying to reduce our taxable income as much as possible with expenses and deductions that we're eligible to take. The first one is health insurance premiums. You know, if you have a health insurance policy established under your S corporation, you can deduct the health insurance premiums as a shareholder. You need to be greater than 2% shareholder, an owner, and most of you are 100%. So don't forget to deduct your health insurance premiums for policies established under your S corporation. Home office deduction. You know, this is really the S corp reimbursing you for the use of your home. Many of you have an office, like a home office or a bedroom that's dedicated. Once again, you want to make sure that that area that you are taking a deduction for, whether it's the simplified version or through an accountable plan, you want to make sure it's a dedicated office space. And dedicated means it can't really double up as a guest room. It can't be your living room or your kitchen table. It really has to be a dedicated office, and you know what that means, right? So you don't want to forget that your home office deduction is a very powerful one, and you want to leverage things like utilities, rent, or house payments, right? Based on a portion of that home office, overall the entire expenses of the home. This is a very powerful deduction. Section 179 deduction for equipment and vehicles used in the business. Many of you drive, right, to and from your different locums engagements. And I'll get to mileage, which is a vehicle expense that you don't want to forget as well. But if you purchased a new car, you bought an electric vehicle, Teslas are very popular these days. I love driving them. I also own a Tesla, but many of you medical professionals put a lot of miles on your car. Don't forget to deduct and use the 179 business deduction expense, right? So you want to make sure you're leveraging the section 179, because many times you can really reduce the use of your car and reduce your taxable income by tens of thousands of dollars, right? In that first year and the second year. The next one is a health savings account, or an HSA. I talk about it in previous videos, but it's really a health IRA. So you're putting in pre-tax money based on your filing status, whether you're single or married. You can put more money down if you're married, but you're really putting it into a health IRA so you can utilize that IRA or the HSA for health expenses, eligible health expenses in the future. Hiring family members. This is a very common question and strategy that I get. Remember here, the rule of thumb is that the salary, if you were to hire your family, make sure they're actually a part of your business. Are they truly doing administrative work? Are they truly helping you in the business? And it can't really be a child that's too young to do anything, because remember, the bright line test here is really if the IRS were to come and audit you and they were to interview the family member, whether it's a spouse or a child, you want to make sure that child or that spouse can really explain and defend the salary that you sent them or you paid them, right? Because a lot of locum professionals ask me this all the time. Can I hire my wife? Can I hire my husband? Can I hire my child, my daughter or my son, right? Or multiple? And the real question that I really push back on is, are they really truly involved in the business? And if so, what is the salary you would pay a third party for the exact same role that they do and the number of hours that they work? So that's really the test that you want to make sure. And the last one is the vehicle expense, right? Are you tracking your mileage to and from your locums engagements, right? If that's not being reimbursed or it's being reimbursed, you still want to track your mileage to deduct that, right? Once again, reviewing why and how you're utilizing your S corporation matters each and every year. And that's what my clients and I are doing now. We're determining reasonable compensation. We're reviewing their tax plan and their strategy to make sure they're optimizing the S corporation. And next week, I'm going to be going over how to build tax-free retirement income with a powerful retirement savings vehicle. So you don't want to miss out. So make sure to subscribe and turn on your notifications for this channel, and make sure to share this content with any other locum professionals that you know that could use this information. And until next time, I wish you all a wonderful 2025. Bye.